Good morning. It's Wednesday, the 5th of January 2022, and we're taking a look at the energy markets this morning. We'll start with WTI crude oil, move on to Brent, and also look at natural gas. We'll start with the higher time frames. This is a weekly chart in WTI crude oil, and it's a formation that we're looking at in this corrective phase of the market that we are in. We had the impulsive five-wave move higher, topped out around $85, and then we've had this corrective move lower in just what is seen as an A leg at the moment, looking for this B leg to top out, and we're seeing that with a stalling in this move upwards. We see it more on the daily chart rather than the weekly chart, but we are holding and have over the last couple of weeks have stalled around about the 61.8% Fibonacci retracement level. We can see it here, this red line here. Also, this is in line with the previous swing high that we saw at the end of the third leg on the impulsive move. So really watching price action closely to see if we do stall at these levels. Taking a look at the daily chart, it'll give you a little bit of a clearer picture. This is the A move down, looking for this B leg to top out, potentially looking for it to top out here, and then we should get a C leg lower. However, obviously price action still really playing out. We can see the moving average convergence divergence indicator showing a signs of stalling in the market on the daily time frame. So be aware of that. On the 4-hour chart, it looks a little bit more positive. We have this triangle formation looking really for a breakdown, if anything. That hasn't happened, and prices have rejected the move lower and are working their way higher. The Ichimoku cloud looking to support on the short-term price action. So it's not going to be a straightforward move either way for the WTI crude oil. Brent crude oil, similar sort of price formation. Let me get rid of a few of these lines, which may be a little bit confusing. And let me get rid of the Ichimoku cloud as well. We can see that this corrective move higher, again, has topped out a little bit. We are seeing momentum stalling with this move higher. So that indicates bearish divergence. So again, another short-term indicator warning signs of a potential for this rally higher to top out, but we have got up and we filled this gap that we saw all the way back on the 25th of November. So that is another reason to be a little bit cautious on this rally. On the natural gas, let's take a look at the weekly chart and see how this has played out. We saw this breakdown on the 29th of November week, and we saw the gap lower, which has been filled. So that is opportunity now for a further push lower. In fact, price action has stalled in front of the 61.8% Fibonacci retracement level, around about $3.47, and has arranged between there and the $4.05 area. So looking for a break either way on this. Again, we have the sort of signs of a head and shoulders technical formation, but it's yet to play out, yet to be confirmed. On the daily chart, again, we can see under pressure, we're seeing lower highs being formed, while the momentum on this again looks to be stalling overall. You can see the momentum moving average crossover divergence here. It's stalling ever so slightly, so really looking for this $3.50 level to really support the market. A break of there opens up further downside in natural gas. Really have to recapture gains, as we've said before, on a break of $4.05. So that's the range at the moment, and hopefully we'll see a little bit more progress on this, and join me again next week.